Yo guys, welcome back to Stock Talk Insider. Today I want to talk about the CPI market impact and, well, what we can expect when it comes in cool or it comes in hotter. It's expected that it comes in hotter, so yeah, let's get straight into it. So today's spotlight is on the US Consumer Price Index release. Economists expect a slight increase in both headline and core inflation compared to last month. This would reinforce the view that price pressures remain sticky, keeping the Federal Reserve cautious about cutting rates too soon. What is expected is headline CPI, modest month-over-month rise, driven partly by energy and shelter costs. Core CPI, ex-food and energy, expected to remain firm, signaling underlying inflation is still elevated. The Fed will be watching services inflation, especially housing and wage-sensitive sectors, for signs of persistence. If CPI comes in hotter than expected, bonds yields likely push higher as traders price in fewer or later rate cuts. Equities, growth stocks and high duration names could see pressure. Financials and commodity producers may hold up better. Dollar, likely to strengthen as higher yields attract capital inflows. Commodities, oil may gain on inflation hedge flows. Gold could initially dip on stronger USD before recovering if inflation expectations rise. If CPI comes in cooler than expected, bonds yields likely fall, especially on the short end, as market prices early Fed easing. Equities, risk assets generally rally. Growth and tech names often lead. For the dollar, likely to weaken, boosting commodities and emerging markets. For commodities, gold and silver may rally on weaker dollar and softer rate expectations. For today's CPI, it is a pivot point. A hotter price could extend the Fed's higher for longer stance, tightening financial conditions. A softer print could breathe life into rate cut bets, easing yields and boosting risk sentiment. Direction will likely be fast and volatile, so traders should plan entries and exits before the data hits. Then we'll talk about what it means for my 6 stocks. So SoFi Technologies. If hot CPI, higher rates for longer hurt, borrowing demand and increased funding costs could pressure growth outlook and margins. Cool CPI, lower rate expectations, support lending volume, improve net interest margin stability, and could re-rate fintech valuations higher. AMD, so the semiconductors. If hot CPI, rising yields often weigh on high growth, high multiple tech risk off. Sentiment may pull semiconductor stocks down short term. If cool CPI, risk on flows back into growth and AI related plays. AMD benefits from improved sentiment and stronger capital market appetite. Elf Beauty, so consumer staples and discretionary hybrid. If hot CPI, consumer spending power pressured, premium beauty may hold up better than mass discretionary, but margins could face cost pressure. If cool CPI, improved consumer sentiment, lower rates could boost discretionary spending and investor appetite for growth-oriented consumer brands. Amazon, so the big one, the big company in e-commerce and cloud. If hot CPI, higher rates could pressure valuation multiples. However, Amazon's cloud business offers defensive revenue streams. Discretionary e-commerce spending could slow down if consumers tighten budgets. Cool CPI, stronger consumer spending, cheaper capital costs. Both retail and AWS segments could see improvement demand outlook. Shopify, also e-commerce, but a little bit different. Hot CPI, similar to Amazon retail side, weaker discretionary spending may hit GMV, gross merchandise volume. Growth stocks face multiple compression. If cool CPI, boost for small and medium business activity, better macro sentiment can drive GMV growth and multiple expansion. Then the last one, the honest company, consumer goods, and lifestyle. If hot CPI, cost inflation on inputs could squeeze margins, consumer trade down risks in non-essential premium goods. If cool CPI, better spending, environment, premium and mission-driven brands like Honest may capture more share in health and wellness. So that was it about the CPI data. If you want more of this sort of information, let it know below. And yeah, like the video and see you later.